Welcome. Today we are deconstructing Goldwind, a company that's right at the center of a really dramatic market reevaluation. We're going to focus on the data and the core strategic shifts that are driving this change.
So let's get right to it. In September 2025, Goldwind's stock just surged. We're talking nearly 30%. It completely decoupled from the broader market. The central question for us is pretty simple. Why? What happened?
Now, a jump like that isn't just random market noise. The data is telling us that the market is starting to recognize a profound strategic transformation happening inside Goldwind, one that really redefines its entire future.
So here's how we're going to break all this down. We'll start with that market signal. Then we'll assess the core business, look at the new growth driver, figure out how to value this transformed company, and finally, we'll cover the key risks on the horizon.
All right, first things first, let's examine exactly how this reevaluation shows up in the hard data.
And this is where it gets really interesting. It wasn't just about outperforming the local index. Look at this. Goldwind's performance starkly contrasted with its main global competitors, Vestas and Siemens Energy. That points directly to a powerful catalyst that is specific to Goldwind. What we're seeing here is a fundamental shift in the story the market is telling about Goldwind. The perception is changing, from seeing them as just another cyclical equipment maker to a potential leader in the long-term energy transition. And that's all being driven by their move into a new, high-growth business.
But before we get into that new venture, it's absolutely crucial to ask, how healthy is the company's foundation?
So if we break down the company's profitability, what's called a DuPont analysis, we see a really key trend. After those intense industry price wars really squeezed margins in 2023, you can see the net profit margin is now on a clear recovery path. That provides a really solid financial base for them to make these new strategic moves.
And their dominant market position is crystal clear. By 2024, if you look at the data for new installations, Goldwind had actually become the largest supplier of wind turbines in the world. They've really solidified their leadership position in their core industry.
And reinforcing that stability is this number, a massive 54.8 gigawatt order backlog. What's so critical about this is that a high percentage of these orders are for the higher margin turbines. This gives the company incredible revenue visibility for the next 18, maybe even 24 months. Okay, so the core business is stable. Now let's turn to the pivot, the component that fundamentally changes everything for this company, the move into green methanol. This is what alters the long-term logic for its valuation. So what's the big idea here? It's all about vertical integration. Goldwind is using what it's best at, making low-cost wind power to produce a new, high-value green fuel. This positions them to be a potential low-cost leader in what is a very new and exciting market. And here's the part you really have to understand, how this new fuel is priced. This is absolutely key. Green methanol isn't competing with fossil fuel methanol on commodity cost. Its value comes from being a compliance tool, something that lets its buyers avoid huge regulatory penalties. And that's what creates this substantial price premium. And those penalties are coming. New regulations from the International Maritime Organization are set to take effect in 2027. And they impose these steep carbon penalties on the shipping industry. So for them, the math is actually quite simple. Paying a premium for green fuel is cheaper than paying the fines. And this isn't just theory. Goldwind has already locked in a huge supply agreement with the shipping giant Maersk. That's a massive validation of their strategy. With their initial production about to start, they are positioning themselves with a real first-mover advantage in this brand-new, regulation-driven market. So you've got this structural transformation happening. This brings us to a really difficult question. How can you objectively assess the company's value? Your conventional approach just isn't going to cut it anymore.
Right, because traditional single metric valuation methods, they really risk giving you a distorted picture. If you try to blend these very different segments together, you just won't see the company's true total value. So a more nuanced approach is needed. You have to deconstruct Goldwind into its three core businesses. You've got the cyclical manufacturing arm, you've got the stable, almost utility-like wind farm operations, and then you have this new high-growth, high-margin venture. And that's where a sum of the parts, or SOT framework, gives you a much better lens. It lets you use the most appropriate tool for each segment. You might use a price-to-earnings multiple for manufacturing, but an EV to EBITDA for the stable wind farms, and then a discounted cash flow model for the new green methanol business. This gives you a much more comprehensive view of value.
But of course, no complete analysis is, well, complete without a rigorous look at the potential challenges and the risks involved. So, the key takeaway here is that while the strategy is clear, the path to execution is complex. There are some very material risks. You've got execution risk on a massive scale, there's cash flow risk to watch closely, there's regulatory risk, what happens if those shipping rules get delayed, and of course, the ever-present risk of future competition.
Now, there's a valid counter-argument here. You'll hear that the stock's recent performance has completely disconnected from its modest historical profit growth. And that view is rooted in past performance. But the market's current behavior suggests it's looking forward, pricing in the potential of this structural shift, not just extrapolating what happened before.
Ultimately, Goldwyn's massive pivot is a major test case for the entire green energy transition. Whether it succeeds or fails, the outcome is going to provide powerful insights for the entire energy and industrial sector for years to come.